you. It is Wednesday, the 10th of September, 2008. This is Brian Shannon from Alpha Trends, and the market closed here. Very unimpressive action again here today. The S&P 500 did finish with a gain of 38 cents, or about a third of a percent. And you can see here we've got this red candle, meaning that today's close was lower than where it actually had opened. And there's just, continues to be nothing bullish looking about this chart. It's trying to hold above these mid-July lows, but it still looks like it's inevitable that it's going to decline down towards this level. When the market's as weak as it's been for as many days as it's been, it's human nature to start looking for a bounce, but really there's just no evidence of it in the S&P 500. We see on the 10-minute time frame here, we've got this little downtrend line. We've also got this declining 5-day moving average. The market did rally up to it on a intraday here, but failed at that declining 5-day moving average level. And there's still some good opportunities, on the 1-minute time frame, some nice rallies in here. But I don't think that you can really take the long side of this market very seriously for more than a day trade until we start taking out some of these levels like 125 on the upside, and even there, a swing trade is still going to be dangerous because we've got this bigger level up near about that 126.5 area. So we just remain in a very dangerous bear market here. There's a lot of times where you look at the action unfolding and you see some great movement in some of these stocks. A lot of stocks bounced multiple points today, but they're still within these major downtrends, and the odds just don't favor further upside continuation in them. You'd be happy to know, by the way, that I'm going to go get a new headset today with a new microphone. I did get some good advice from a few people, so I'm going to try the third headset here in the last 3 months, and we'll see if that can fix things a little bit. Just kind of messing with something else down here. Maybe that seemed to work. I don't know. Maybe I don't need a new headset. Probably do, though. Let's take a look at the financials. The XLF was down 22 cents, or 1.04%. As we know, this market gapped up to the high end of the recent range, and this prior level of support at $23 a share now is back into the middle of the range, holding above the 50-day moving average. And looking at a 30-minute time frame, let's just move that over. Hold on. Okay, looking at this 30-minute time frame, you can see that this $20.50, $20.60 actually, that was the level that we were looking at just a few weeks ago as far as being this level of resistance that had been support back here. So we keep coming back down to $20.60. I don't know what the significance of that level is, but it's obviously a number that's important to this market, and we're seeing all week long so far lower highs and lower lows. We've got a declining 5-day moving average, and if this level gives way of $20.60, it puts that 1975 at risk, and then from there maybe we continue to go down and hit new lows again. So very dangerous market in a lot of different areas. I mean, gold continues to get hit hard. It's in a downtrend. We've got a declining 10, 20, and 50-day moving average. No reason to be a buyer of gold in here. A lot of people send me all these conspiracy theories about how the dollar's worth nothing and this and that, and gold is our only hope. But when gold's going down, those arguments all go out the window. The only thing that pays is price. We had a breakdown from support at this $83 a share. That support became resistance here. We saw a little consolidation. Now we're seeing further downside. Same is true. We continue in this horrible decline in oil, and it's horrible, I say, relative to if you're a long holder. Obviously, for other reasons, a lot of people are cheering the decline in oil and also in natural gas. Picking bottoms is just the hardest job there is. Natural gas is going to need to clear at least $36 before it has any chance of holding on for more than a day or two. But just a lot of damage out there. That's the point I'm trying to make. IWM, of course, the 76 level is the big level of resistance this market will need to clear. I don't see that happening anytime soon. We've got these lower highs here over the last month. We've also got lower lows. We're testing, trying to hold above this $70 level. On the intraday time frame, you can see it also made it up to the declining 5-day moving average. average, odds favor further deterioration in here. But of course, you've always got to be aware that there's opportunities, short-term intraday where if you're short heavily, and that's where, people are looking at these double inverse funds and that sort of thing, or the double long, and those are good funds, but be very careful with leverage, especially in a market that's ruled by emotion like this. The semiconductors were down another 3 pennies again. Before this market can really make any headway, it's going to have to clear that 27 and a quarter level. There's probably going to be some upside trades occasionally, but right now it continues to just deteriorate day after day. Just because, again, it's down a lot doesn't make it a buy. I think that maybe if this 5-day moving average can flatten out, then we can begin to rally. But again, where does it have the potential to go before it meets a source of supply that's likely to slow it down? And that level, of course, again, is right up here at about that 27 and a quarter level. So the risk reward just isn't very good on the long side, no matter what you're looking at. And especially when you look at the longer term time frame. Again, I'm going to remind you of this weekly or rather monthly time frame on the semiconductors. The semiconductors are here at 5-year lows and looking like they're maybe going down to test that $24 level. And of course, that's not good news for the NASDAQ 100. The NASDAQ 100 had broken this little triangle, and it's continuing to decline. There's really no bounce in here. It looked like intraday maybe they were going to, maybe they shook them out right here at the daily VWAP on this 1-minute chart. We had a little bit of a rally, but that failed to hold. This market couldn't even make it like the other ones did up to the declining 5-day moving average. As long as that 5-day moving average is heading lower, there's no reason to look at any long trades other than for maybe just a quick intraday scalp. The market remains in serious trouble here, and testing the lows is not out of the question, and probably more likely, and in fact is more likely than a recovery here.